surging momentum. But can this momentum last in an environment where we're seeing a tug of war between inflation and deflation threats? Here to talk about this is Steve Dunn, head of exchange traded products at Aberdeen Standard Investments. Stephen, welcome back to the show. Thank you very much for taking the time to speak with us today.
Thanks, Niels. And obviously a great topic to have on the conversation considering its most recent activity. So I appreciate the time.
Well, I think any topic on gold right now is super timely. I mean, it's just so much focus is put on gold now that we're at record highs, and I sort of wanted to, not necessarily talk about the record, but what's driving this. And I think a big part of this is this tug of war between inflation and deflation, and deflation threats actually maybe aren't a bad thing according to your guys' latest report.
Yeah, I mean, it's not as if deflation causes harm for gold. It prefers a different type of environment in most situations. And I think, as you had suggested earlier, you do have this tug of war that's taking place. Everything that's taking place on the monetary and fiscal side would certainly suggest that at some point in time, this stimulus should theoretically cause some type of inflation. Putting money in the hands of consumers and asking them to go out and spend that money, that should lead to inflationary type of aspects. But obviously, we're teetering on the edge of some of the other challenges associated with COVID-19 and potential reversals and shutdowns and things along those lines. So it is that day-to-day tug of war that's taking place. But I think if you looked at gold specifically, you almost have created a perfect storm for gold to perform particularly well, and I think that's what investors have come to appreciate about gold and potentially holding gold within a portfolio. And so certainly that run up over the last couple of weeks. So I think you got some additional momentum into that. So you got a jobs report that wasn't fantastic. Obviously, you got some different opinions of whether that V-shaped recovery is really going to truly be V-shaped, and then obviously the continued struggle with COVID-19. Some of those additional factors certainly pushed the momentum in gold through some of those into that new territory.
Well, and I was going to say, I mean, if the economy does continue to struggle, if there are demand side issues, and deflation does rear its head, that just forces central banks like the Federal Reserve to act more aggressively. I think that's something that we saw in the financial crisis in 2008. Is that they saw this deflationary threat and they reacted, and now it's just even so much more bigger.
Yeah, no, you're exactly correct. I mean, as I had indicated, and as the Fed has indicated, they have suggested at this point in time that they're willing to do whatever it takes to keep this economy from going backwards. And so they've created that backstop in the marketplace from that perspective. So I think this combination of monetary and fiscal policy, it's got to drive some type of inflationary factors at some stage. And so I think, will we continue to fight some of these issues from a deflationary standpoint? Yeah, I mean, if you look at things like energy components, right? If you get another global slowdown, then obviously that's going to have a huge impact to the energy and energy prices, energy usage. Does that provide some, deflationary factors that play in? Perhaps, but I think that is the challenge, right? And I think that's what you've seen the markets trying to understand and trying to forward price, which is, how can we build in this expectation around COVID-19 when we just don't have a real good sense of sort of what it looks like? But certainly, all the factors that are coming into play would suggest that we're trying to cause an inflationary type of environment, and certainly gold is going to be supportive in that type of environment. There was some underlying factors that caused it, but like I said, I wouldn't be terribly surprised if we see some sideways trading for a little bit, some profit taking that may bring us back down to sort of that 1900 level. It's sort of where we had suggested, but there's a lot to support current prices at its current level, and so for folks that are holding gold from a strategic standpoint, there's certainly enough there to suggest that strategic hold is it will benefit.
How do you play the market then? I mean, do you buy now? Do you wait for, sort of that the dip, the consolidation period, or do you sort of look down the value chain? We've talked about this before. About silver and
Yeah.
platinum maybe sort of replacing gold as just sort of that on that as that value play.
Yeah. So I think there's a couple things that you can do from that standpoint. I think the strategic hold should continue to hold. I think there's enough of a case that would suggest that you will be rewarded for holding gold in that situation. I think if you're trading gold, then obviously take advantage of any pullback in those types of situations, because I think there is an opportunity for more stretch. And then for those folks that are looking, may have the suggestion that the value associated with gold has sort of passed us by. Silver has had a huge run as well, and has actually outperformed gold over the last month, 3 months, anything along those lines. So silver has had a fantastic run. And so even I would argue that some of the value has been taking out of silver. But if you're following sort of the investment dollars, and that's what gold, silver, platinum have been driven by this year, is not necessarily the industrial demand, but it's the investor demand. You've seen a pretty significant pickup in platinum from that perspective. Of the three metals that we mentioned, platinum probably is of the most significant value, and we have seen folks rotating towards platinum from a value perspective. Obviously the questions with platinum, there are some issues, and obviously the factors that affect platinum are very different than gold and silver. But I think if investors are looking for more of a value orientation, then it's probably not there with gold any longer. Silver, it's moved away from, and I think investors are looking to something like platinum, perhaps as a value opportunity.
So just going back to sort of the next catalyst for gold, does a Fed announcement of a yield curve control get us there? Get us to that next thing, or does it have to be bigger? And also too, we look at government stimulus, the fiscal side of it. Does a $1 trillion aid package get gold there, or does it have to be sort of that 3 trillion that Democrats were pushing for? So how much has the market priced in, and sort of what's needed to get to that next level?
Well, I think certainly the market has priced in that backstopping component. Is $1 trillion enough? I would suggest that the market has probably priced in something along those lines. Would 3 trillion be different to the market? Yeah, I would argue that may provide. And so I think what the market is trying to understand is, as we're all trying to figure out, is who knows a little bit more information than perhaps what I have. And so if the market is anticipating $3 trillion, is the suggestion that, hey, the recovery is going to take longer than thought, that the issues are deeper than what expected. And so therefore, that hold of gold just becomes even more valuable. I think the other factor that's starting to come into play, not as much in gold, although you're hearing it in gold, you're certainly seeing it in some of the other areas, is about scarcity, right? And so and Niels, as you know, of covering commodities as long as you've covered, you mentioned the word scarcity in any type of commodities market, that typically drives some markets. The investment demand for gold, silver, and platinum has been extremely high, not only this year, but even extending into the end of last year. And it's certainly taken up sort of the industrial components associated with silver and platinum. But there is an element that in silver and platinum that is expecting, sort of the industrial cycle to get back to it. We'll see how that pans out. We've started to see some green shoots in China around those items. But I think, back to the stimulus, does $1 trillion make gold excited? My guess is that it's probably pretty well baked into it. Does 3 trillion start to move the dial? My argument is, that would certainly start to move the dial, from that standpoint. And like I said, if you continue to hear these concerns around scarcity because of the high investment demand coming from different types of gold vehicles, not necessarily just gold ETFs, but gold coins and small bars and things along those lines, you continue to hear that demand across the board is extremely high. And obviously supply becomes tighter and tighter.
Stephen, thank you very much for sharing